It's finally happening. The greed of Wall Street that we warned about is finally U-turning. Folks, there is a reason here on March 26th, I sent this very alert right here to course members where I said longer term trade, I'm going short arm $90 with an $87 option. Anybody who held onto that option to today tripled their investment in that option. Now, some people didn't play it that well. I didn't hold it all the way until today. I wish I did. Some people made money. Some people lost money. Some people who held it all the way, they've tripled their money. Some people took out the double, whatever. The point is, this AI transition is going to get a big smack upside the head, and it's basically starting now. And I want to show you exactly why it's happening. This right here is Nvidia's Q3 set of earnings. This is before they release their Q4, and they're about to release Q1, although you got another 33 days to go before you think Nvidia might come bail out the AI plays. I want you to understand how Wall Street operates. And you don't have to understand all the scribble here, but I'm going to do my best. This is how Wall Street operates. Wall Street says, okay, we are at $18 billion of revenue for Q3 for Nvidia. We're going to assume that you're going to come in with $20 billion of revenue. And that would represent about a 10.3% growth between those two quarters. And guess what Nvidia did? And this is why Nvidia tends to do decently. Nvidia beat that number. That number was beat with a $22 billion read. But wait a second. Markets already anticipated that they would beat the estimate. Yes, that's literally how stupid euphoric this stuff gets. Look at this. Typically, on historic ratios, you would want to beat by 15 to 19%. They only beat the beat by 10%. And guess what happened? The stock started selling down. Let me try to show this to you, to show you how greedy Wall Street is getting for a moment, a little bit of a different way, okay? So you say, hey, we think we're going to grow 10%. And then Wall Street goes, okay, they say they're going to grow 10%, so let's assume they're going to grow another 10% on top of that. So let's assume they're going to grow 21%, which that would be 10% more, right? But then the company actually beats that, going from 18 to 20. They actually beat that because they go to 22, which basically is the extra 10%. But Wall Street is so greedy, it's like, so you grew the way you said you would, got it. Then you beat like you historically do, got it. Is that it? Really? You're not going to give me more? Sell. The top is in. That's legit how greedy Wall Street is. Frankly, this morning in our stock market open live stream, first of all, I'm like a short DJT and take some tendies at $35, and a lot of people did and made a lot of money. Hope you made money as well. I made money on the trade as well. Remember, I send all my alerts to everybody in the Stocks and Site group, expiring coupon code tonight. Email us at staff@meetkevin.com if you want to bundle up. But literally on the live stream this morning, we see this Bloomberg suit, and he's like, you know, we're expecting earnings to beat by 5%, and if earnings don't beat by 5%, we're going to sell. That's basically what he was saying, and I'm like, he is the epitome of the Wall Street greed. It's like, the numbers are so good at these companies. The earnings, the money Nvidia is printing is so freaking insane. It's so good, but solely because it is not better than the street's expectation, which is already better than what the company is forecasting. Sell. And so what do you have today? Nvidia down another 5%. Guess what? A year ago in March, April, I made a video. You can go watch this video. I made a public analysis of Nvidia. Nvidia stock, meet Kevin, type that in to YouTube. 10 months ago, I go, Nvidia is a monopoly. And in the video, even though I you know, it's part of the titling on YouTube, I titled that the video Nvidia $3,000 stock. We talked about basically how some people have expectations of it going to 3,000. I said I thought within the next 2 years, this is a $700 stock, and I would buy it at 480. I bought it at 480, increased my exposure a lot. I didn't play it perfectly. Nobody plays perfectly, okay? But the point is, it's not an $800 or $900 or $1,000 stock. Not yet. Especially when the growth rate this year goes flat. So I hate to say that because I want to be all in like AI bull. This is the future. But the future is going to take a little bit more time to arrive. And so now the concern is, what happens when AI collapses? Do you want to be buying the dipply doodlaw of the Qs coming down a little bit? Well, what I would ask you, if you're thinking about buying the dip on the Qs, is that the dip you want to buy? We just got started. It's entirely possible, well, it's probable we're going to go to 406, but I think it's likely that we're going to go to like 373 after we get through this earnings season. So the question is, when do you buy the dip? Here's my opinion. I'm going to take a little bit of a chill pill here. Coffee. So, in my opinion, here's when you buy the dip. You need to get through earnings season. You're probably better off just playing spreads, playing earnings. So you could assume that there will be a lot more volatility than the market assumes for earnings. Buy puts, buy calls, right? One wins, one loses, hopefully. Unless, of course, you don't get volatility, then they both lose. This is all part of trading. You don't have to trade. But the point is, by doing that, you might actually hedge yourself from the FOMO. Because what everybody's concerned about with buy the dip is, well, what if it runs? Well, we'll have a bunch of cash. Hedge yourself in both directions with an option. And then when it's time to actually buy the dip, you have the cash to buy the dip. So when is it time to buy the dip? A, inflation rolls. You need inflation to roll. And quite frankly, even when you get one inflation report that comes in and says, yeah, we're at 0% inflation, guess what? People aren't going to believe it. People are going to go, well, one report doesn't make a trend. Prove it to me with another report that inflation isn't taking off again. So it's going to take 2 or 3 months of data to actually confirm it's time to buy the dip again with inflation. And this needs to happen before the Fed drives us into a recession with these high rates. And we really need to get through probably 1 or 2, maybe even 3 earnings seasons. Look at what Netflix this morning did. Netflix this morning is like, yo, y'all, we're going to remove subscriber guidance because y'all don't need to know how many people are using and paying for Netflix. Y'all just need to know how many engagements each user is having. That would be just like Tesla saying, hey, we're not going to report delivery numbers anymore, like how many cars we sell. We're just going to report how many FSD miles people are driving. Oh, yeah, that's exactly what Tesla's doing, and that's why the stock's down like $25 since I sold it. I was supposed to rebuy. I was supposed to rebuy last week. I put it on my freaking calendar. And I told everybody in the Stocks Insight group, we talk about this. We talked about this morning in the Course Member Live. I'm like, I will tell you when I rebuy. I will send the alert when I rebuy. And I set the calendar. I'm like, I'm going to rebuy on 30 days. I wasn't expecting this. Was not expecting this. This is the start of the AI. Again, I don't want to sound like the bear, but SMCI this morning set it off. Why? You know why? I'll tell you why. Because remember this right here? Okay? SMCI usually comes out and says, hey, our earnings call and our earnings report is going to be on a certain date. In this case, it's the 30th. And usually they go, by the way, we expect it to beat massively. Today, all they said is, our earnings call is coming out on the 30th. Guess what happened to the stock? Boom, down 18%. The lack of news became news because the Wall Street greed is getting flushed out. I've been going to cash for a reason over the last 6 weeks because of this stuff. Now, the hard part, obviously, is, again, figuring out when to rebuy, because obviously going to cash was the right move. But that's the hard thing. Well, you've got some earnings coming up. Obviously, next week, we're going to have Nvidia. Well, Nvidia's in 33 days. AMD is on the 30th. But next week, 40% of S&P 500 earnings, like actual the volume of earnings, occur. And so today we're just going to, today it's Friday. You're not really going to get anything. You're going to have a weekend to chill over Netflix and chill if you want. Tuesday, you'll get General Motors, UPS, General Electric, some of the cores. But then on Tuesday, you're also going to get Tesla, Visa, Enphase, Texas Instruments. Texas Instruments going to give you AI insight. Tesla, you think they're going to give you, oh, look how many people are signing up for FSD? No, because they're all still on a freaking trial. Of course, Elon could say something like, hey, we're not going to build a Model 2. We're going to build 5 different Model 2s, and the stock goes up 20%. So Elon could definitely say something and move that stock substantially. But in terms of the broader space, you'll have Boeing next week. You'll have AT&T. You'll have Meta. That'll be big for the AI. Hey, have you bought enough AI chips, or are you continuing to buy AI? ServiceNow. Hey, are you actually making money off selling AI services to people or not? We will get those answers in earnings. So really, if you want to buy the dip, I suppose you can, or just wait until you actually get some data. And again, I know some people are like, oh, but by then you might miss it. It's so easy to buy stock. You just go in there, boop, you could buy so quickly. There should be no reason to think that that you would not have an opportunity to buy stock. I don't know, folks. I don't want to be bearish, but SMCI having a miss like that this morning, and I was shorting those suckers earlier this week. I took some tendies on shorting SMCI, but dang, was I expecting to go down 20% in a day? They're down 20% now. No. But we did send an alert to course members on SMCI as well. So look, my goal with my trade alerts, everybody in the Stocks Insight group gets them, is just to give you the ideas. Ultimately, you have to trade yourself, right? Like, you could take ideas, you choose which ones to go on if you want, you go on different things or whatever, you take the inspiration on the sector or whatever, and then you have to decide, when do you take profits, when do you set your stop losses, whatever. I'm not guaranteeing that you're going to make money or that I make money on every move. That's not the guarantee at all. The point is to share perspective with you and vision about what I think is happening, and you should take that and sort of go, yeah, this could get worse before it gets better, or you think now is the bottom. I would sincerely like people, though, to comment and tell me why you think now would be the bottom. The pain is still ahead of us with the earnings. Again, maybe everything will beat. But TSM, ASML, those are indicators that, maybe you had your AI spend and the next orders aren't coming. Do you think Elon Musk is going to burn even more CapEx buying the next, GPU sets from Nvidia right now, or is he going to milk the H100 that he just bought 10,000 of for as long as he can? Probably that, because we're running out of free cash flow at Tesla. In fact, we might go free cash flow negative, which would be a problem because then it's going to wake people up to the idea of, oh my gosh, this sucker might have to raise money. Tesla. Okay. In addition to that, I don't think his pay package is going to get approved. I'm not saying that you should vote against it. I'm just thinking that people are publicly going to say, yeah, we support Elon getting the pay package he was promised, but other people are just going to go look at the stock performance and go, F you, man. I don't own Tesla shares. I'm not eligible to vote. I'm not voting. I'm not telling you how to vote. And I'm not trying to be Tesla bear here. I'm just saying the level of uncertainty that will happen if that pay package doesn't get approved will actually increase, not decrease. Uncertainty is so challenging. It's so hard because, I love these companies. I love Apple. I love Amazon. I love Nvidia. I love Tesla. I don't like Meta. But that's okay. That's the beauty, is we get to make these choices. But the problem is everything is at potential risk of performing exceptionally poorly. So I guess if I were to give broad advice, not personalized financial advice, if I were to give broad advice, I'd say, look, if you have needs in the short term, like you're not going to be able to make payroll, you should be in cash. If you have startups and you need to be there for them, don't speculate on the stock market right now. Save your business if there's a recession. If you are an employee and you think there's a chance you could get laid off, prepare for that. Don't get caught blindsided where all of a sudden your stock's down 50% and then you get fired and then you're reamed. I don't know. I'm nervous. Another thing to keep in mind, this is just like housekeeping. We have decided to do our roadshow starting next week, Tuesday. And I want to talk a few more things about the market too, but quickly, if you want to learn about investing in househack, we are closing the investment within about the next 2 weeks. It looks like, tentatively, on Tuesday, we will be at Sacramento and probably San Jose. Wednesday, Seattle, Spokane. Thursday is probably Vegas and Arizona. Friday the 26th is Texas. So that'd be like, I think it is. Hold on a second here. I think this is San Antonio. That is, we're trying to figure that out. That's Friday. Oh, no. Sorry, Friday the 26th is San Diego, probably like the Anaheim area, and then LA. The 27th, Tampa, Orlando. 28th, probably Atlanta, Boston, New York, DC. DC will probably be on the 29th. And then it looks like Chicago. Then we've got Texas is on the 30th. And otherwise. So if you want to be part of that, make sure you sign up at metkevin.com/roadshow. Okay, that's for househack. You can learn about mini funds. You can learn about househack. If you're an accredited investor, bring your letter, your Invest Ready certificate. All right. So what else? What? This is very interesting. I just opened this up. I was just going to look at like what bonds are doing in gold. I mean, gold's over 2,400. Oil's up a little bit. Bonds are only down 2 basis points. But this is very interesting because this has actually been my core concern here. Something strange has been happening with jobless numbers. Most of the past several weeks have shown that first-time claims for unemployment claims haven't benefited or haven't fluctuated at all, as in zero. A string of weekly reports showing exactly 212,000 initial claims has raised a few eyebrows on Wall Street. The Labor Department spokesperson noted that while a string of 212 prints on jobless claims is uncommon, it can be attributed to consistent jobs pictures related to the seasonal adjustments. Okay. So, in other words, people are like, hey, how are these numbers statistically possible? In other words, I think people are calling BS on some of the numbers here. The numbers are made up, one participant opined. Yeah. Remember, folks, we talked about this yesterday. When unemployment claims hit peak, that's the time to buy the dip. We talked about that yesterday. We warned about today's movement in the stock market following Netflix yesterday. Literally warned about it. Netflix is down 8.5%. We warned about this yesterday. So, like I said, I don't want to be bearish because I worry so much. I'll tell you, why do I worry? People are like, who cares? Like, if you're cash, why do you care? Well, first of all, because when people get fired, I feel really bad. But in addition to that, we talked about this. It was the December of FOMC meetings. This, right here. House prices and the stock market falling further could basically self-fulfill a recession and push us into a recession. I do not think this time is different. I think this time is the same. And I know. Maybe that's shocking to people. Maybe that's literally shocking to people. It's kind of cool, isn't it? Probably gonna get demonetized for that. Oh well. Still kind of cool. But yeah, I don't know. Nobody knows. That's the problem. Nobody knows. But this is just the start. I'm really worried about that. And again, I've been screaming go cash for 6 weeks. And people would just get mad at me. And they're like, oh, you're just saying that because you're a bear and you don't want to be wrong. Nah, man. You go into a recession, it hurts. It hurts everyone and everything. I don't care how short you are. Like, you're going to get hit somewhere. Anyway, thanks for watching. I just wish everybody the best out there. Stay safe. Seriously, thank you for watching, and we'll see you in the next one. I'm going to make another Kahlua. Whatever. Bye.
why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
Even though I'm a licensed financial advisor, licensed real estate broker, and becoming a stockbroker, this video is not personalized advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show shall not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purposes of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services we may benefit from. I also personally operate an actively managed ETF. I may personally hold or otherwise hold long or short positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuer other than househack, nor am I presently acting as a market maker. Make sure if you're considering investing in househack to always read the PPM at househack.com.